Great. Hi, everyone. Today, we've got an incredible panel for you at PAY360. And I'll be honest, my personal opinion, I think this is the most varied and interesting panel that there is across the agenda. So no offense to everyone else. So with that in mind, why don't I just go straight into introducing the panelists for you. First off, we have Keith Grose. Keith is the head of UK for Plaid, an open banking data network that powers the fintech tools millions of consumers rely on to live healthier financial lives. In his role, Keith leads strategy and operations for Plaid's UK products. For those of you who don't know Keith joined Plaid from Google, where he scaled hardware efforts with Pixel phones and Google Home speakers, and helped run business strategy for some of the company's new technology bets such as Google Pay and virtual reality. Prior to Google, Keith also worked at the management consultancy Bain & Co. So welcome to Keith. Next up, we have Sam Bevan. Sam is the international head of emerging at Snap, which is one of the fastest growing teams there. The emerging international team focuses on sourcing, onboarding, growing high potential advertisers to Snapchat. There's a key vertical within the space is the ever emerging landscape of fintech across EMEA and APAC, with disruptor banks, investment apps, and many others looking to engage with Snap's audience. The emerging international team currently expands across Europe, Middle East, Israel, APAC, and Canada, with offices located in Toronto, Tel Aviv, London, Paris, Amsterdam, Sydney, Dubai, and Hamburg. So Sam is clearly a man who used to have great air miles prior to the lockdown. Like Keith, before joining Snap, Sam worked at Google, as well as working at Facebook as well. Welcome, Sam. Next up, we have Andrew Scott. Andrew is the global head of secure access for HSBC's retail and private banking wealth management businesses. In this role, Andrew is responsible for custom identification and access management across more than 30 markets and regulatory frameworks. He has worked in digital since 1996 with a variety of companies, including previously to HSBC, Microsoft, and BBC, as well as a whole host of others. Today, he's fully engaged in helping his teams, delivering his team's mission, which is making it easy for the good guys, making it hard for the bad guys. And finally, we have Ed Maslaveckas. So Ed discovered the potential of fintech while working at Salesforce in 2014. And then in the summer of 2015, he sat down with his co-founder and developed the first version of the company that he's the CEO of, which is Bud. Bud is a financial platform for young adults. It's evolved into an API platform with thoughtful data and service capabilities and is backed by world-renowned financial institutions. Ed's been a keynote speaker at Money 2020 in both Las Vegas and Amsterdam. And he's part of Business Insider's 35 Under 35 and was featured as an agent of change by LinkedIn and Capgemini. So welcome to Ed. And as you can see, we have an incredibly prestigious and well-varied panel. And unfortunately, you have myself as the moderator. For those of you who don't know me, my name is Amir Nooriala. I started my career in the original .com boom, working for Cisco Systems in California. This was followed by a move to London with stints at Accenture, Barclays, BGC Partners, Cantor Fitzgerald. And most recently, I was the COO and then Chief Strategy Officer of Oaknorth, and the Chief Strategy Officer and Chief Commercial Officer of Callsign, where I currently work, which is the world's leading digital identity firm. So we've got all of the blurb out the way. We've had a great set of questions submitted by people who are hopefully watching this panel live now as we speak. So why don't we jump into the questions? I'll try to kind of stitch a coherent narrative about them. And let's see if I'm worth the fee, although I was paid to do this. And just to say, we had over 50 questions submitted, by the way, over the last 2 weeks. So I'll try to narrow them down to 6 or 8. So apologies if your question is not asked. So question number 1, to the panelists, you've seen your user base stuck at home. They've been shopping and banking and messaging online. And that's the only thing they've been doing. They haven't been doing anything physically, in stores, in branches, etc. So has this caused any issues for your business or any nice surprises? And why don't we start with Keith?
So I think, fortunately or unfortunately, depending on how you view it, COVID-19 has legitimized fintech. I think with bank branches shut down, you've seen a whole new generations and movements of folks have to move to online and digital banking. And so actually we've seen a 72% increase in digital financial app usage in the UK over COVID-19. And I think basically what you've seen is 5 years of growth happen in 3 months in terms of adoption and usage. obviously that varies in terms of the types of apps being used. But I think the reality is if you can't go into a bank branch to do your banking, you have to change your habits and move to online and app-based banking. And we've definitely seen that happen. PayPal, for example, just recently shared that people over 50 were their fastest growing segment from March through April. I think that just shows you like there's a big shift that's happening because of this. And I'm hoping that it makes some big movements coming out the other side when hopefully the world goes back to normal.
Makes perfect sense. Ed, are you seeing a similar thing over at Bud?
Yeah, so for us, we kind of had this, obviously the first couple of weeks of lockdown, there was a bit of a freak out. Sort of, we analyze a lot of like consumer trends and sort of create sort of data systems around those. The kind of the initial behavior was kind of like, you know, people going and increasing basket sizes and buying toilet paper. Obviously, we didn't see that, but we saw the increased basket sizes. And then on the other side, obviously, a lot of businesses, you know, with projects we were working on, kind of, it's obviously a bit of a freak out. You know, how do we work? That kind of transition as well. So again, consumer behavior changing from, you know, where they worked to where they live and now where they work. So what that meant for a lot of our customers were, you know, the typical models in which they analyze customers weren't really as relevant. So there was this initial kind of freak out for a couple of weeks, and then for us, you know, we kind of had to engage in a lot more conversations around how do we use sort of open banking data and real data to kind of inform who our customers are now. You know, have they lost their jobs? Have they changed their income? Have they changed their expenditure patterns? You know, how do we help lend against that? How do we help kind of find relevant products and services for these essentially new customers as far from a data perspective? So again, bit of a freak out, and then this kind of, you know, like he says, it's just kind of real validity for us around what we've seen as like phase 2 for open banking, which is the kind of being able to use the data for actionable outcomes and insights. So that for us has really accelerated, and obviously, you know, no one likes to benefit from a tragedy, but for us, you know, it's been a kind of a real kind of whirlwind of a time. So, but definitely interesting, and there's definitely a lot more to come from kind of some of these changes. Makes sense.
So we've heard from kind of Ed and Keith from an infrastructure perspective. Andrew, this must be the kind of the proving ground of everything you've been working on over the last few years, and you've got a view across all the different markets. What have you seen?
So we've seen kind of the different waves across all the different markets that we look after, and so yeah, we saw, for example, that in Hong Kong, as the lockdown started, we were seeing a significant shift, both to digital, but also to our contact centers, whether that's via chat or you know, traditional telephone numbers. And that growth, that growth happened in waves across all the different markets. Yeah, we had some interesting stories, like, you know, our contact center agents who support those live chat services typically work in large buildings with, you know, desktop computers and monitors. When lockdown started, they were literally carrying those things home in rucksacks and stuff, and we ended up having to helicopter in laptops to our contact center agents who were you know, locked down at home, and the only way we could get those machines to them in India was via helicopter. So wow, we saw a kind of an extraordinary shift to continue to support those you know, those customers through that time. So yeah, digital, you know, huge drive, and yeah, as far as the sort of, you know, the growth that we were expecting to see over the next few years, yeah, very much accelerated. And you know, my expectation is that a lot of that will stick. You know, when we've launched new experiences in markets, we've seen mobile engagement go from kind of once every 3-4 days to literally every day in markets where we've reduced the friction sufficiently. And that's a pattern that we expect to stick. We'll see, you know, footfall go back in the branches eventually, but you know, the convenience that we've enabled here, I think, is largely here to stay.
Makes sense, absolutely. And Sam, I've got a same question for you, but I actually had a very specific question asked for you as well. which I'll add to it, which is, have we noticed changes in the way Snapchatters are shopping during COVID-19? So the original question and a follow-up for you as well.
Yeah, no, great question, and a hard one to follow. I thought I was being generous, Ubering equipment to my team members across London. Helicopters out there. So I think, for Snap, obviously, unprecedented times for all businesses. And I think one thing we always look at our businesses in twofold, our community side and then the business side. If we look at the community side of the app, we actually saw a huge surge of increased engagement and usership of the app. We've just gone through 2 quarters of sequential growth. We just reported on Tuesday, we're up 17% in terms of users to 238 million throughout Q2. I think one of the things we noticed during COVID was the consumption habits on Snap changed. More and more people were using it now for conversations when they're at home. And we actually saw the same amount of communication type interaction on our platform that we typically see over holiday seasons like Christmas, which it makes sense when you think about it. People are obviously at home more, similar to what they would have been in more kind of traditional, normal world scenarios. If you flip it over now to the business side of the app, obviously we monetize through ad products. I think what's been really interesting is, yes, COVID has had a hit on the revenue growth rates for the organization. But due to the long-term investments that we've been making over the last 3 years, especially into building out a self-service, performance-led ad products, the hits probably weren't felt as dramatically as they could have been. And we still are growing around about 17% year over year as well in terms of our revenue. What this really means is we actually just saw some verticals really struggle during this period. Obviously, companies that fall into the travel space, movie studios, it's not surprising they pull back on advertising. People aren't going away, people aren't going to theatres. So what we saw was actually other verticals booming because their products all of a sudden became more relevant. And a great example of that is fintech. We saw this at the beginning stabilize and then very quickly actually capitalize and grow as our community now more than ever were wanting to get more savvy with what to do with their money, be it through investments or online banks. In terms of that follow-up question to shopping, we have seen consumption habits change a little bit there. We saw certain very sub-verticals skyrocket, like the searching for athleisure, pet products, home goods, really starting to trend on Snapchat. I think a lot of people are talking about lockdown pets. I myself impulse bought a puppy, so not surprising. There was kind of some changes in buying habits there. And we also saw certain sub-verticals really skyrocket within things like the way people change food, the way they're buying food. Obviously, it really shifted people onto online delivery more and more. I think a lot of us probably experienced struggling to get a slot with the supermarkets during this first couple of weeks. But where we saw a massive shift in a lot of advertisers looking to scale were delivery companies like Deliveroo, Uber Eats, those types of brands, as more and more people were looking for those dine-out experiences at home. So overall, we have seen a huge industry shift towards more and more mobile activity, both across more traditional industries as well as more digital. And we actually saw a huge increase in engagement with our advertising. I think it's because people are at home more. So on average, we saw 19% increase in users swiping up or clicking in to our ads, because I think a lot of our advertisers who were scaling during this period really lent in more than ever into what is the value I'm providing to a customer at this point in time. So yeah, it's a bit of a blend on the business side. Like I said, was some kind of hopefully short-term hits to our growth rates, but overall it was balanced out due to amazing verticals like fintech, which, like a lot of the conversation already going on today, it makes sense to why people are shifting to a more digital mindset.
Okay, so I think there's a very consistent theme there across the answers, where we want to be friends with you guys because you can tell us what stocks to buy, because you clearly know what's happening real time with the information you have across your networks. The next question actually is on this same kind of theme, which is, we've seen surveys saying that websites or apps, the UX and UI components of them are now incredibly critical and affect people on how they shop, bank, and message online. So that if the UX or UI isn't easy, if there is too much friction, potentially they're going to switch to something else, because now online is such a critical element of the way people are living. Sam, I think that's a perfect question for you to start with. What's your views on that?
Yeah, I think increasingly as everyone does this shift onto mobile, I think the excuses for having a poor mobile experience disappears. I think the world has been going that way for the last 3-4 years, and I think anyone who's kind of not jumped on board and built a mobile optimized site or app, I do think are going to really struggle going forward, full stop. I think if we look into user experience, I think a couple of good examples, which I always pull upon when talking to advertisers, is a great stat from eMarketer, which is for every second your site takes to load on a mobile, you're going to lose 7% of conversions. You're going to lose 7% of that traffic actually going all the way down the funnel and signing up. And another one, which I think is really important, is your initial sign-up flow. A lot of apps and a lot of business models were originally built upon the more information you get up front, the better, because then you can make your ads more effective and efficient. You can reach out with more targeted information to your advertisers down the road. You understand them better. The reality is that's changing massively. People are more and more sensitive to the types of content they want to provide up front, first and foremost, but also people hate filling in forms on mobile. And it blows my mind that so many companies struggle to understand this. And I think some recent things which we've launched on our end, which is helping advertisers and companies in this space, are things like Snap Login Kit, which allows you to take the basic sign-up information you need for anyone to sign up to your business straight from Snap onto your website. And this allows businesses to get away from a little bit of that janky filling in a form experience that a lot of users face at the beginning. And then I think the second fold, which I'm sure we'll go on to talk about later, but introducing more and more integrated platforms such as Snap Minis, which is a great example of where we're trying to get people having to be taken from one app to another, and really just thinking about that user experience, because it goes back to that first thing I was saying. For every second you add to a sign-up experience, more and more users disappear. And if we think about 10 seconds, it's not that long really, and that's 70% users gone. You're not getting them back. So for me, I would go as pretty extreme in saying it is the most critical component when it's to finding new customers and kind of retaining them, because the standard's been set so high. It's very hard for companies to operate in that space if they're not thinking very forward on it.
Yeah, that makes perfect sense. And to be honest, that's one of the reasons, Sam, we were so excited to have you on the panel and giving us a point of view from an app owner who has billions of messages a second going across it. Andrew, you're responsible for authentication and kind of digital identity for a bank that has an app and a website across, 30, 40, 50 different countries. How does this affect you, and how do you think about it?
So, I think as Sam says, the tolerance of customers to poor experiences is dwindling very, very rapidly. And so, our I guess our view is we take a kind of service design view because we do interact with customers in a variety of different ways. It's not just on a digital channel, so we need to think about the things that we put in the post to them, whether they're physical cards or whatever, plus also their experience when they phone us up and stuff like that. But clearly in the digital space, we spend a lot of time looking at the the empirical data and just iterating, which may not be traditional bank approach. It was more of a project kind of delivery mechanism rather than product management. So we've shifted that balance a lot. But I think one of the key areas for us is the getting the right balance between the kind of the know your customer, the KYC requirements, and low friction. And so whether that's leveraging government identifiers or kind of collaborative identity projects, and then kind of using that with the kind of the progressive disclosure that Sam mentioned. In other words, don't ask for the full form when people just start using your website. Yeah. So working our way through that, working our way through what gets us through the regulation in each of the different markets, what gets us through the kind of the legal views in each of those different markets, but with a real focus on make it easy for the customers, because they deserve it, right? I mean, and if we want to keep them, we've got to make sure that we're doing the right thing there.
Yeah, absolutely. And let's see we get a different view from the infrastructure player. So Keith and Ed, you're obviously, as far as I'm aware, you're not actually owning a UI or a UX. You're helping owners of them by giving them an infrastructure to play with. Are you getting requests from people to improve the experience, remove friction, or are you guys actively thinking about that kind of thing? I mean, Ed, I'll start with you.
Sure. Yeah. I mean, we have our own app in the market where we test and learn different flows. So we get a lot of feedback in there, and equally, so we're really aware of that. We started our life as a B2C app, I think similar actually to Plaid back in the day. There, the first thinking was a B2C app, and then you kind of discover that everything underneath needs fixing first, and then you find the opportunity. But so something I've always been really excited about is kind of good flows and good experiences. Sorry, my WhatsApp's going crazy. However, like we have a lot of partners that, because of the way our regulation works, we have to sort of vet and make sure that the flows are compliant and that those are conforming. So we do inevitably work a lot on kind of user experience. And equally, when it comes to payments and aggregation, the critical path is always around a really good user experience. And using kind of what Sam said. I wrote some notes, really useful stuff, but exactly the same. Customers will drop off if there's friction, if it's difficult, if it doesn't make sense. PIS is becoming such a huge thing and is moving into so many different verticals beyond banking, that getting the education and the flow right is so critical. So, we've got a lot of customers working on some really great use cases with retailers. We've got direct retailers. We've got payments from peer to peer, and we've got payments when you're topping up your investment products. So all of those, in lots of ways, have to have different flows and a different experience, depending on how much friction you want to put in there. Given if someone's investing, they're putting half of their life savings into a new investment product, you want a bit more friction, a bit more understanding. If I'm paying you, you want it to be quick and snappy, not to use Snap. But so for us, again, it's super important, and that's kind of on the payments side. When it comes to some of the data enablement side, we're working with institutions to take things from that work traditionally in retail, so in banking, and stick that into their apps. And with that, there comes some automation that needs to happen, some more data capture. And so we've got a number of different pieces that are looking at that. But again, if you look at your bank app today, it's pretty full. How do you put more in that, and create more relevance in that application without just adding more buttons? but adding more functionality underneath, and that's where we're going to. So yeah, super key, and again, it's the prevalent issue for sure.
Makes sense. Keith, what do you think?
Yeah, I would echo that. And we actually do have a UX, because for most of our customers, we own the bank linking process. And so, you know, with the increased focus on digital banking and fintech, you have to be really laser focused on user experience, because Sam's stats would definitely validate that, right? With hundreds of thousands of users going through this flow every day, each additional click or each additional form that you have to fill out makes a significant difference in dropout, which affects all of your customers and end users. So you really have to pay attention to that. And I think to the other point Sam made around people filling out forms, I think this is something where I'm continually talking to folks in the fintech industry and pumping up open banking, because this is where it really can add value. You know, doing a bank transfer with Face ID in one click versus if you ask your users to go log into another app, copy and paste their account number, sort code, you're going to see massive drop off. And so I think you're starting to see movement towards much better user experiences over time as part of COVID. And I think it's definitely increased the focus on it. The other thing that's interesting to think about is, you know, with your customer support teams now being forced to work from home as well, how can you provide services and information to your end users in a way where they don't have to contact you directly? So we've seen lots of interesting movements around, can you change error messaging? Can you change the way you do customer support? And I think that's something that is quickly becoming a key focus for folks as well in terms of how they improve their UX. Is if a user wants to contact you, is there an easier way than them picking up the phone that you can make that happen?
Yeah, absolutely. That makes perfect sense. And you know, that's, I think, one of the things I've loved about putting this panel together is we've got people thinking about how open banking can streamline everything together and remove friction. We've got Sam, who's coming from a Western company who's taking that kind of WeChat model of non-financial integration, of using everything through one platform there as well. And us at Callsign, when COVID happened, we commissioned our own survey on this exact topic of US bank customers, and the results all came out to say, we will switch banks, we will switch retailers, we will switch anything if there's too many clicks. The one bad sign I saw of that survey, just as a quick side note, was that people aren't concerned enough about security though. So that's the one element we need to think about, is removing friction but keeping it secure. And obviously, Andrew, that's your job, and that's why probably you're going to be the most in-demand job over the next 5 years. Anyway, I've kind of wasted the time. Moderators are not supposed to talk. Next question. So we've spoken about removing friction. We've spoken about kind of UI, user experience. However, that kind of poses a little bit of a question around developed countries or those who are socioeconomically disadvantaged and don't necessarily have access to smartphones or high bandwidth. One of the questions we've got is around that. And are people thinking about, with the shift to online, what are the thoughts and strategies around reaching out to those customer segments that are not as privileged with technology? Andrew, as the global bank, why don't you start answering that one?
Yeah, thanks, Amir. So I think it's about having a range of options for your customers to contact you. And you know, we've talked about the branch, we talked about the contact center, whether that's phone or through chat, and then digital. And then kind of in digital, I mean, our kind of vision is actually to provide borderless banking and world-class wealth management into our customers' pockets. You could tell I read that, right? But the into your customers' pockets bit is the really interesting bit, because when we've got this right, people are engaging with us a lot. That's principally via an app, because we can provide a good experience around that. But there is only so much you can fit in the app, as you say, right? And so also a variety of customers may not have access to to the sorts of smartphones that we would need for that. So browser remains a pretty strong channel for us. It's it's kind of less, and strategically it's one that we'd be looking to phase out. But one of the advantages of being a large organization that doesn't necessarily have to be laser focused on any one thing is we do have that capability, and so we provide services in Indonesia and Vietnam in a wide range of areas, and the range of customers that we support includes people who don't have access to the sorts of phones that you'd require with secure enclaves and all the sort of stuff that we would want. So we found that mix of services is something that we or that mix of if you like sort of contact points is one that works in that space.
Makes sense. Yeah, Sam, I'm going to show off a little bit here. I do know a little bit about Snapchat. And the way I've been educated about Snapchat, you had Twitter that was designed for the kind of the basic phone and a limit on characters and text messages. You had someone like Facebook that's designed for a website, and the whole UX of it is very focused on that. Snapchat is proud of the fact that it's designed for smartphones and camera phones, and how you start with a camera. Your job is head of international and emerging. Those are regions that I would assume might not necessarily have a lot of high-end smartphones. What do you do about that? What's your strategy around that?
Amir, we should get you over to our marketing department. I think it's a great point. I think Snapchat is all about visual communication. So by default, we're sending and receiving pictures and videos, which is known with high bandwidth capabilities. I think the use case that we always talk about in Snap is our shift in from being a very iOS focused company into being across iOS to Android. And it was interesting, even just making those small investments into revamping our app in 2019, we've seen our rest of world audience grow to nearly 77 million, up 37% year over year. I think the one case which I can speak to probably more than others would be markets such as India, which is one of our fastest growing markets in Snap. I think in the fintech space, I think one thing that's really interesting there is a lot of that economy, when it was coming online, actually is avoiding kind of the traditional transactions that our worlds went through. They actually went straight to digital. And I think a lot of people sometimes underestimate the acceleration of growth of smartphone penetration in these regions. I think a great example would be in India. Last year, they grew to 450 million users having smartphone access, which is up 40% year over year and is expected to grow nearly double by 2023. I actually think whilst there are challenges in infrastructure today, which I'm not going to deny, I actually think it's building for these regions as they come online is so important and a huge opportunity for brands across all verticals, but in particular fintech, because a lot of, I think there was some crazy stat I was reading where nearly 90% of India don't have bank accounts. However, since this surge of some of these disruptive fintechs coming online, overnight that shift has gone up to 70-80%. So it is interesting to see all kind of different markets, the infrastructure confinements, but the reality is the tech isn't that far out for some geographies. I think people often underestimate some of the government infrastructure investments that these countries are doing. I know obviously India could be seen as an anomaly due to the rate of growth their economy has seen over the past couple of years, but this has been seen across the world. More and more governments are investing first in digital structures. So I think there's amazing initiatives both in the private and public space, which I would probably disagree somewhat in the sense that I don't think we need to build for lesser capabilities. I think it's a case of building a roadmap which is in line to the more broad adoption of bandwidth across these regions.
Okay, so that makes sense. Everyone's gonna get there, and it sounds like they're gonna get there quickly. So with that in mind, Keith and Ed, so Keith, obviously Plaid being originally US based and Bud being originally UK based, are you finding you are getting demand for your services outside of those two big kind of finance centers, and other people are looking for your infrastructure plays as well for their more emerging banks? Let's start with Keith.
Yeah, absolutely. I mean, my Twitter DMs are full of people asking, when are you coming to Indonesia and things like that. So there's definitely demand for services like this. But I think the other important thing to keep in mind is that there's a huge population of unbanked and underbanked people in all of the Western developed markets as well. And we need to be careful to keep that in mind, right? I think there's a significant portion of folks in the UK alone that are still cash-based in terms of how they typically receive their salary and did their expenses. And now in this world of COVID, where a lot of stores aren't accepting cash, you have to make sure that you can actually support those folks. And so I think this is where it's really important, no matter what countries you operate in, to talk to a really diverse group of users and make sure that you're not leaving anyone behind. I think we're really excited about the shift to digital, but there's thinking about how can we actually support people that need it as well, where they are, no matter the services. And I think one example of this in the US for us is we helped with the loan distribution for the Paycheck Protection Program, right? So the government said we want to provide relief because of COVID, but actually getting that relief in the hands of people is really hard. And I think a lot of governments across the world are struggling with that. That's an example of somewhere where helping the unbanked and providing great digital services can really combine to benefit folks. And so I think there's all sorts of great opportunities, both in developing markets, but also in developed markets, to make sure that you can use fintech for good.
Makes sense. Ed, how about yourself?
Yeah, so obviously we have some banking partners that are obviously global. We have an Australian investor, and so we're working across a couple of different markets right now. For us, and sort of slightly echoing Keith, is there is so much work to be done in this space. For us, the real growth opportunity is around the data services. So now we're moving into the space where those data services are becoming more and more important. How can you derive that value, or how can you kind of expedite journeys? So for us, I think right now our focus and our strategy is there's a couple of different markets that are important to us. The UK is the one we're talking about right now, and continuing to go really deep in that market, work with lots of different partners and build up an ecosystem is really important to us. That said, we've done a lot of work to internationalize some of those data services. And as we're seeing kind of the aggregation, the data aggregation and payments kind of globalize across Southeast Asia and other regions, and then obviously Europe, and there's lots of different players. The question we're being asked is, look, we've got an aggregator already, or there's an aggregation provider that we like using, or we've built our own data aggregation, or we have our own data. How can you enrich that first party data or that third party data? And so for us, I think, we'll certainly have to pick our markets in a sort of diligently, given the kind of the depth of work and the ecosystem that can benefit in all the different use cases. So again, for us, yes, we see that demand happening across different regions and places we haven't necessarily thought to go. But we have to, we're still a relatively early startup. We have to pick our battles right now for sure. But I'd love to be everywhere. I'd love to travel at some point again. So new markets are interesting, but there's a lot to do here. So I think I echo that from Keith.
Great. There's a lot of agreeing on this panel. That means everyone is on the same paycheck, or we just all,
I can disagree.
Very attractive.
I can disagree with Keith if you want.
Well, I'll tell you what. The next question I've got is one again I've received, and I have no idea how people are going to answer this. I'll try it out. The question is, how will the challengers convert their feature and community-based differentiation into brand loyalty over time? And I'll start with Andrew, and I'll go to Sam on this one, and then I'll go to Ed and Keith again. So Andrew, how will the challengers convert their feature and community-based differentiation into brand loyalty over time?
So I think it's relentless focus on customers, right? What do they need? And then it's about whatever promises you make, you've got to keep, because it's about trust. That long-term relationship is about trust. And so if I think about, where we've introduced new brands into markets, following through on that and making sure that those relationships are genuinely valuable to the customers, and that we do what we say we're going to do. That's absolutely the key. And I think if we look at, kind of in the fintech space, if we look at the range of options and the range of relationships that customers have, very few of, well, I mean, I'm generalizing. A lot of people are multi-banked. A lot of people have services from multiple different providers, so open banking provides a great way of bringing those things together. And the services that we as consumers value are the ones that add value to our lives, make it easier for us to do the things that we want to do, or enable us to do things that wouldn't otherwise be possible. And so whether that's us being able to lend, or partners being able to provide great access to a really good customer experience that aggregates the services across multiple different financial services providers. I think there's a lot of space here. I mean, we talk about banking being kind of relatively boring, but people's money is pretty interesting to them, right? So the more that we can do to make it straightforward for them to do the things that they want to do, and enable those life-changing experiences, that I think is the key. So it's about trust and just focusing on what's important for the customer.
Yeah, and I guess with the fact that the shift to digital means it's not about where's the nearest branch, it's about what features and support and trust. So yeah, that makes total sense. Actually, Andrew, I was watching a panel about 2 years ago, and it was on challenger banks, and the new ones that everyone heard of were speaking. And then a guy from Metro came on and said, "Hang on, we were a challenger before these guys." And then someone from HSBC came on and said, "Hang on, we've got First Direct, and First Direct is actually the real challenger. That's the original challenger." And that's something I think a lot of people forget as well. That as well as having the big red.
If you want to go back 150 years, HSBC was set up in Hong Kong and Shanghai because at that time, in order to make an investment decision in Hong Kong, a piece of paper had to be written, put on a ship, sent all the way back to the UK, where then a decision could get taken. Another bit of paper would get written and put on a ship back again. So yeah, I mean, it's about understanding the problems that your customers are experiencing, and figuring out, right, how do we help to solve those? But yeah, First Direct is a great example of innovation.
Yeah. Sam, how about, I mean, on the other side, where again you've had a surge of traffic, like you said, you're opening up new markets. How do you build brand loyalty for these new markets and new users?
I was just laughing there. I think Andrew probably shows the development of HSBC from shipping one piece of paper across the sea, taking probably weeks or months, to now sending laptops through helicopters. There's a lot about the industry that we all have the pleasure of working in.
Absolutely.
I think for this, it's much more of an outsider looking in, having the privilege of working across quite a lot of these disruptor banks, investment companies, insurtech. What we typically notice is most go on a very similar journey with us. At the beginning, it's all about, hey, we need to get our brand out there, brand awareness. We want everyone knowing our name. They want to get recognition. And then gradually, as they mature, it's when they start shifting into this mindset of, okay, how do we keep this customer now? I think some of the stats on just mobile apps are pretty crazy. I think it's 98% of apps on mobiles don't get used more than once. And I think quite a few of that falls into the fintech space because people don't necessarily understand the value of what they've downloaded. So what we've really talked to a lot of our advertisers in the space is really about getting that message across really clearly at the beginning, so people know what they're signing up to, so they're not caught off guard. And I think this is often really kind of a pitfall for a lot of advertisers in this space, is they go out there with a very flashy ad campaign, they get people really excited, they then land on the app and it's like, hold on, this is completely different to what I was expecting. Where's this 7% return I was guaranteed type play? And I think one of the things that we've noticed as kind of more and more of them mature is they shift into really leaning in on what makes them different. And I think Andrew hit the nail on the head. Customer service centric seems to be the most sticky factor amongst any of these. And I can talk from personal experience. Even last week, I had an issue with 2 of my accounts coincidentally got hacked at the same time. Well, I say that I left my wallet somewhere, so not that surprising. And the different response between my more traditional bank, I won't name the name, of 48 hours to get back to me in terms of what they're going to do to compensate and solve the matter, compared to one of the disruptor banks. Within 20 minutes, the whole issue had been resolved. And I think it was just kind of chalk and cheese and the difference in the service that they provide. And again, money-wise, majority of my money is in my traditional bank still. But after that experience, it does make you think a little bit more, being like, actually, oh, wow, this is a fully regulated UK bank. It's got the full 250,000 protection net. That might, like, it does make you think. And I think leaning in on that customer kind of centricity is so important. And I think the other thing was going back to what we were saying before around good UX and how it makes people feel. One of the banks that I work probably a little bit closer with, they did a really simple change where they were basically trying to show how much money you were saving, where they round up every dollar to a full amount. And before, it literally was just a tally every time you logged into the app, being like, you saved $7 over the last month. They then shifted it into this really simple visualization of different products you could now afford because of your savings. And their user and engagement went through the roof all of a sudden, because it was a bit more gamified and fun and playful. And I think people had like a really positive experience coming to the app. So it made them kind of feel a bit more sticky and want to go to see what's going on. So I think it is really interesting. I don't think people necessarily know how to build loyalty over time in this space because it's so new. Most of these fintech firms are under 5-10 years old. But I think, where it really seems to be the ones winning is around this customer centricity and UX design, which differentiates them from everyone else.
Again, which makes perfect sense when there's no physical kind of nearest location wins. It's all digital. That's an obvious way to differentiate. And I think for the organizers of PAY360, I think there's a perfect kind of 2-minute video snippet there to put out there for every founder and fintech CMO to watch of how to mature your advertising. I personally found that very interesting, so thank you for that. Keith, I'll start with you on this one. Are you finding your customers are coming to you and saying, help me differentiate so I can get better loyalty from my customers? Are you seeing that as well as an infrastructure player?
Yeah, absolutely. I think everyone's looking for that. I think actually the key question right now goes a step beyond that, which is, will users pay? I think that's the key question in consumer fintech right now that a lot of companies are asking themselves. Part of this is driven by a little bit of a worry that COVID might affect the VC funding environment and the ability to do growth raises down the road. So there's suddenly been a big shift from people thinking it's not just about growing a massive user base, it's can I grow a sustainable business out of that? And you see lots of interesting strategies that folks are trying, premium subscriptions targeted at just the niche of power users, usage-based fees, referrals for switching your utility bills. The amount of ways that people are trying to figure out where is the real value to users beyond just the great brand and the great UX, I think is really exciting to watch that happen right now. But I would echo Andrew and Sam in that ultimately it still does come down to, are you providing value and are you relentlessly focused on your customer? And I think the folks that are really nailing that are going to find ways to monetize across all of those methods longer term. But I think that is a big open question right now, right? Are these companies going to become profitable and sustain themselves and self-sustaining? And if so, how?
Yeah, absolutely. Ed, how about yourself? What are you hearing?
Yeah, there's a couple of different sort of approaches to this, right? There's differentiation by product. So saying, okay, we have a really targeted customer base, these are the type of people, we want to focus on these and we can solve the problems for those people. And then, what are the services that are really targeted to a wealth customer, life insurance, bundle that up and be really targeted. So that way we're not trying to solve everyone's problems, but we really focus in on our customer. So that's certainly, I think, what we're seeing, I think through a lot more through kind of the openness of data means that actually you don't have to build all these services. You don't have to build your own bank account to be able to like get access to the data, to be able to build that value around it. So whether it is, you know, somebody who's more focused on budgeting and they really could do with, you know, getting their utility bills lower. So that's one path. The other path is the kind of, you know, where challenges are now, where they're a little bit more established and they're trying to broaden out and sort of say, okay, how can we service, you know, more different use cases? You know, how can we add, you know, more tax products? Whether it was just before around kind of simple budgeting, how do we, you know, look at, you know, self-employed? How do we work with people that are now building more wealth? So that for me, there's two different strategies. I think they can both be successful. But for me, I think, you know, as we see a lot of people that come to us with early, you know, very early ideas as well, you know, it's those early targeted, it's for X customer that looks like this, and this is how we solve their problems. And it's a very sort of product-centric approach that I think are going to be the winners, certainly in the short term. And even if you've got an established product, if you can continue to think about those new problems, because actually as customers, due to COVID and due to the change, a lot of those customers have new problems. And if you can focus down on those, for me, and align a marketplace strategy to that, then for me that makes sense as well if you're a kind of a more established player.
Yeah. Okay. I think for me, it's becoming quite clear from everyone's answers: customer service, data, richer data, access to that data. I guess linking it to the panel, you unlock all of that by proving the digital identity, but you've got to do that without introducing friction, but that's going to ruin a user experience. So we're getting a lot of similar themes, which hopefully I think is that echoing is showing that everyone is pretty much agreed on where the path we should go. We've got a slightly different question now, and this one's more about how you get there. And whoever wrote this question is obviously paid by words. I'm going to have to read this one, so apologies. I'm going to look at my screen now. On this panel, we have Plaid and Bud enabling large enterprises to connect to a myriad of services quickly. Also, Snap have opened up their infrastructure with Snap Minis. And we also have one of the world's biggest banks who daily has to decide between build and buy. Can the panel share their thoughts on build versus buy in developing infrastructure for solutions? So Ed, I'm guessing you're going to have a slightly biased view and you're going to say it should be buy and partner with Bud. But what's your view on this?
Yeah, I mean, yeah, the partnership approach is interesting. Of course, you want people to buy as much stuff and to expedite their builds through partnering with platforms. But I mean, ultimately, when we go into, you know, really good partnership discussions and we have, you know, long-term partners such as with HSBC, where that kind of gets to when it's, you know, 2 or 3 years in is not, it's much more of understanding of, look, there might be things that we're building that you're also building, and it might be really valuable for you to build that internally. And that's absolutely fine. Let's figure out what that middle ground looks like. Whereas there's other customers that, you know, sometimes you're saying, well, of course you're going to build that thing yourself. And they're saying, no, we absolutely don't want to touch that. We don't want to go near that. And they'll have their own reasons. So for us, I think, you know, the out-of-the-box solution when you're working with kind of like 90% of the customers, you know, of course, it's like, here's the services that make sense for everyone. But for kind of some of those longer relationships as you get down the road, I think that's where you find new opportunities. There's certain things we've been asked to build that we thought, is that actually an opportunity, you know, for us to build that? And then you go around and you speak to a few other customers and they go, yeah, we would like you to build that too. And you kind of kick yourself. You think you're some sort of a product genius, but you're really not. And they say, yeah, no, that's a real thing. And, you know, it could be worth X. And you're like, okay. And that's the thing, you know, I keep talking about data services. That's the thing that we've been most surprised about, that people just want to get those things done. And we said, you know, whether it's a tech company, a fintech company, or a bank, you know, we found that there are things that we thought they'd want to build that were core to them that they said, no, we don't really care about that as long as it does X. So for us, I think that kind of constant, we at Bud, we've not really figured out whether that is a product approach or a sales approach, but it's certainly a blending of the two, which is, always asking questions and kind of taking those questions back to our product team or going to other account managers and understanding what that crossover is. So for us, it's not about having to sell everything. It's about kind of, pick your battles and understand what they need. I don't know if that somewhat answers the question and gives some nuance to, buy everything.
No, I think that's a good answer, considering you were desperate to shout out, buy everything from us. And as a founder CEO, you're probably not allowed to say this, but I'm always happy to surround myself with people smarter than me. And I can just say, that's a great idea. I'm going to use that and put my name on it. Andrew, you're probably, yeah, there you go. Andrew, you're probably everyone's ideal customer. What's your view on build versus buy or partner?
So we look at it kind of at a capability level. There are capabilities that we would just not be interested in building ourselves because they're solved problems or we just don't have the expertise. We want to be focusing our energies on the right things. In a lot of cases, we focus our energy on integrating capabilities that we've bought from other partners. So somebody might have some specific expertise in a particular area, and our job is to make sure that we can take that thing and we can put it into an end-to-end architecture that that makes sense and plugs into all of the existing systems that we've got. And so when we look at these things, we kind of, there's a variety of different criteria that you'd use. One of them is, time to value, and how long is it actually going to take us before we can put this in front of customers and really genuinely get some value back from it. Also, what's the total cost of ownership of this? So, historically, it would have been a kind of project-based approach where we'd build a thing and then we'd kind of, it would be fine and it would just keep running. And then we'd go back to it 5 years later and go, oh, look, we need to upgrade it. Now, clearly with all the conversations that we've been having in the space that we operate in, it needs to be a product approach. And so either we've got a product team who's sitting iterating that, or we are, we're working with a partner who have kind of collective investment going into that product team. And so we're not having to do all of the iterations ourselves. We can leverage that kind of pooled investment. So there's a variety of different kind of approaches that we take on this one. But been around long enough to know that if you can keep the decision rational, then it's going to be a decent decision. As soon as it gets emotional, it's like, no, but that's my thing, and I built it, and like, oh, that's where it gets difficult. We just need to see through all of that. But no, it's a fun part of my job actually, is to look at those things and work out, right, actually, do we want to do that or not? And then clearly from our point of view, very rarely does one thing solve the problem in all the markets that we operate in. And so sometimes we have to build a kind of a framework into which we can plug multiple different vendors who collectively can support us in all of those different environments, whether that's because of different regulatory environments or because of different technical spaces or whatever. And so that's kind of that's where we look to. That's not a problem that we can get a vendor to solve for us. So we definitely have to do that. But where there's specialist areas that that we can leverage, we will absolutely do that.
Yeah, makes sense. And I think a lot of people watching this on the vendor side were probably taking notes there and learning how to pitch better. So with that in mind, Keith, are you going to refine what you were thinking in your head there now that you've heard Andrew speak?
Yeah, it's funny. I feel like Andrew stole my thunder there, because I was going to say, when I have this discussion with people, I always say it's a trade-off of cost versus competency, right? And so for most scaling companies, partnering for a very specific use case makes sense. Like for Plaid, our relentless focus is making the easiest way for you to connect your bank account to an app. That's what we do. We do that across 15,000 banks through a single integration at 5 nines of reliability. And like, that's it, that's simple. And if that's not the core competency of your business or the core feature of it, you probably want to partner with somebody who's focused on that. On the other hand, if you're focused on one particular market and you only want to link to one or two banks, it might make more sense for you to own it yourself. So I think it's a real trade-off on competency, but the fact that we have hundreds of engineers to manage this platform, for most folks, unless you're going to build up this engineering team and manage it yourself, it's a lot easier to partner, especially if you start thinking about finding the benefits of scale in a single global provider. And I think you see this in lots of, digital identity is another great thing. The example of this, KYC, like there are really great companies that specialize in all these different parts. I think for open banking, oftentimes we provide real savings and value to our users because that's what we specialize in. But I agree that just needs to be rational, cost versus competency.
Yeah, and as an Iranian who anyone can offend my honor at any time, that's probably my biggest weakness. So I will take that as a learning point. Sam, so we've heard about banking infrastructure and partnering. You previously spoke about, login with Snap. This question is referencing Snap Minis and that as an infrastructure play. Maybe do you want to answer the question with a little bit of education for us on what Snap Minis are and then kind of how it's going to help?
Yeah, no. So I think for Snap Minis is our first attempt of really allowing third-party developers to have a place within Snap. So we first tested out the concept of minis with the games about 6 months ago. And then we literally announced at our partner summit less than a month ago. We're now opening this up to multiple different industries and verticals. I think allowing app developers within different spaces to get the best of Snap into their app and for us to get the best of their app into Snap is a really interesting model of where it kind of is a bit of a win-win for both parties. I think for us at the moment, we want to make sure that these are services which are relevant to Snapchatters, because if it's not going to win or benefit either party. And I think for us, what's really key for this, and I always think key to successful in integration is this kind of who's it benefiting? And if it's not benefiting the consumer, it's probably not worth it. I think when we're looking at really the philosophy behind the minis, we look at threefold. It's first, it's harder now than ever for developers to get reach and distribution. We talked about earlier how 99% of apps only get used once or twice. That's a real problem in the industry. Next, it's hard for developers to build upon social experiences between friends. Like, for instance, why would a bank need to look into this? It's probably on their priority list at the bottom, or God, it's probably nowhere near the top. And I think the third would be developers are incredibly time constrained, especially within startups, fintech being one of the most. Like, your developers have all these amazing things to be working on security, privacy, all these things. Wherever you can lean on a third party to provide a bit of support for your, I'd say, user acquisitions play, it just makes sense. I think a really good example of where this has been used in the payment space recently is a ticketing company in the US for movie tickets. So at the moment, if you think about the buying flow you would go for buying a movie, it would be either, hey, do you want to go to films? You then jump on a phone call. You then try to look in that, hey, you seat 2B, 2C. Okay, let's try book it. And then like you're both booking on different systems. One of you could get timed out. Like it's a very janky experience as it lives. I think a great example of where Snap has brought it all together to really benefit a consumer is where you can actually now start a chat and, hey, you want to go to the movies? Load up the ticketing site, and then you can actually pick your seats together in real time and then pay for it separately because they're separate transactions. And I think it's a really good case of where it's showing a really clear value to the customer. It's bringing that social element into a buying flow, which traditionally was being done offline and hard to track and measure, and making it simple. I think the second example, which I love, is where fintechs have lent into our Bitmoji kit to make their I'd say banking more fun. Someone mentioned earlier, banking's not the sexiest fun topic of the world, but it's really important to all of us. It's what funds our lifestyles. How can you make it more playful and fun? And I've seen some great uses of our Bitmojis with a couple of fintechs, where I think my favorite is when you hit a certain saving goal, rather than just getting like a generic tick or some graffiti, you now have your personalized avatar jumping up and down, fist pump in the air, and even coming up on your iWatch or whatever. Like it just really makes people feel, oh wow, that's me. Like it's a more personal connection. So I really think it's probably the second point, which I think is the most important in this space, is how can it enable fintechs to gain from our social experiences that Snapchat provides. So I think that's where the value is. But if it's not leaning in on any of those three pillars, I don't really think there's much benefit. So I think it has to be a win-win scenario for both you as a business, us as Snap, and then ultimately the consumer.
Yeah, and you're giving me inception level imagery here in terms of, you know, Snap owns digital identity for people in, let's say, in the messaging communication type space. And so you're going to open up your user base and those identities to relevant services. Very nice parallel to someone like Andrew at HSBC who'll want to open up his user base and his digital entities to a bunch of fintech services. But should he connect them himself? Should he partner with someone else to bring them in? Then you got the Bud and the Plaid guys coming in and saying, no, you can do it with us, and we can do it globally, and we can do it with every fintech in the world. And that links to what you were saying earlier about you don't want to have too many apps. You know, some people, you shouldn't even have apps. The reality of it is, how many versions of an identity does a consumer want to have? How many logins do they want to have? So that kind of consolidation, and we'll see a banking consolidation or kind of a more social element of consolidation as well. So in my head, I'm getting these like layers of imagery, and maybe I've been in the sun too much and it's kind of messed me up a bit, but I found that fascinating. Unfortunately though, this being live and this being virtual, I am getting a number countdown on my screen telling me we are rapidly running out of time. So with that in mind, I'm gonna just say there were a few other questions I had on Gen Z and millennials, and I was really excited to see if Sam or Ed or someone were going to claim they were Gen Z or millennial, and if they were going to out themselves and their age. We had questions on self-sovereignty of identities and who should own identities and things like that. So we had lots of things that we could have taken over the whole conference, but we've run out of time. So instead, what I'll do is I just want to thank our panelists. As I said, I think that is the most interesting and varied panel you could find on this topic, and therefore we've seen that in the quality and the breadth of answers we've heard to the questions. So Andrew, Keith, Ed, and Sam, thank you so much, and thank you to PAY360 for organising, and I hope everyone enjoyed it. Thank you all very much. Cheers, guys.
Thanks. Bye.
Thank you.
Thank you.